All right. So we had an amazing day today. Unfortunately, as you see here, we got stopped out, but our bias was absolutely correct. Absolutely correct. Targeting these Asia lows, London lows. Remember, because in order to go up, you want to see it go down first. So let's break this down. So originally, I was expecting it lower, right? Because why? We got that sell side, right? We got them equal lows, relative lows. Even though all-time highs is here, for it to go up, it got to go down first. So I was expecting a sweep on liquidity first, then to go up higher. So what you see here, we finally we get an SMT right here at 955 with ESNQ. We get an SMT. Then we get that inverse fair value gap right here. Right, matter of fact, let's just break this down right quick. Why did it just do that? Why did it just do that? I just delete everything. Anyways, no market replay, so you can see. Anyways, so we get the SMT, then we get the inverse fair value gap right here, close below. Then we get the change in the state. So we got the three signatures that we're looking for. Inverse fair value, well, we get the SMT, especially it's important because it's targeting the draw, right? You want to catch the SMT that's targeting your designated area where you're actually aiming for it to go. So we get the SMT, inverse value gap, change in the state right here. We get two of them, and we get a breaker, right? And we get a breaker. So let's zoom a little bit more. Right here, we get a high, low, higher high, lower low. So we got multiple confluences. We got the SMT, change in the state, inverse value gap. We have a breaker, right? We have this first presented fair value gap is underneath, so we have a lot of support zone that I'm looking. I mean, a lot of resistance that I'm looking at, right? So once it came back in, once it came back up, this is when I actually got my short position here. When it came back here, as you see, I have my stop loss above this inverse value gap because why? I wasn't expecting it to come back up here because I was expecting this first presented fair value gap to get offer me resistance. But you see, it came up, swept out this high, did not. So you see, the high was at 34 points. I left it. I like it. I like my stop loss to be anywhere from 30 and under, right? So it was at 35. So unfortunately, it came and stopped me out. Didn't take the high. Displaced lower. Then it gave us everything that I was looking to see the first time, right? I should have got a re-entry, but I didn't. So it got below the inverse value gap. You see how it's staying in the lower half? It's in the lower half, right? Then look what it did. Displaced lower right here. Closing below this first presented fair value gap. And it created this change in the state right here. So it comes up, respects it, displaced lower. Remember I told you before, in your displacements, you want to see it create a fair value gap that's coupled with a change in the state, right? So we got the displacement. Look how it's here. Look how far it closes. Boom, closes way down here. Then it comes back up, right? Look at the fair value gap, multiple fair value gap. It comes back up. Remember, the most insensitive part of the change in state, aka order block, is from the wick to the open price. Look how it respects it to the T. Didn't even have the willingness to come back up to the first presented fair value gap, right? Drops lower. You see here, drops lower. This one I was thinking about getting a re-entry, but I say, you know what? Let me just watch price, right? Let me just watch price. Drops lower. Look. This is how you know price is doing. If price is doing what you expecting it to do, and if it's going in your favor, right? Look how it's staying in the lower half of inefficiencies, right? It's leaving breakaway gaps, leaving the upper half unmitigated, right? Letting you know that you're aligned with proper order flow. We got the bullish candles holding us, offering resistance to push us lower, right? It comes back, don't have the willingness to come to the upper half, displace lower, creating a change in the state right here with this candle right here, validating the change in the state and this fair value gap right here. Look how it literally respect this fair value gap to the T. So you got to change in the state when it closes right here. Look how it comes up. Remember, the most sensitive part of the order block is from here to the open, right? Let's draw the mean threshold of the change in the state. Look at it. Look at the 50% range. Look at the mean threshold. It don't have the willingness to come up into the mean threshold. Then what happens after that? This place is lower. And then literally just dump. It hit all of our targets. London, it hit Asia lows, London lows, midnight open. So this was literally TP1 for me, TP2, TP3, and then if it got down here, the last TP5, and you see 119 points if I would have left it, if I didn't get stopped out. But it's okay because we was correct on our direction, and we was correct on our strategy. We was actually correct on everything today. Only thing we was wrong is stop loss placement. Right? Oh, hold on. I thought I had my executions on. See? Stop loss placement. That's the only thing that was wrong with this trade. Supposed to put my stop loss at the high, risking 34 points, but 34 points one contract is only $70. But what I realized is you just have to put your stop where it has to go. You have to be willing to risk whatever you're willing to risk to make whatever. Because look, I was going to risk this 34 points, right? And my first TP was actually at this low, right? And look at the risk reward, right? It's a negative RR. So that's why I was targeting the second one was this low here. Look, 57 points. And we had got that. And then you just leave the rest as runners. But anyways, wonderful day. Unfortunately, I could not participate in this move, right, with the money. But I was in the move, live trading it, live watching it. So everything was correct. And if you want to watch the live recording, right, I did trade this live on YouTube. I was in this for I think an hour and 50 minutes live trading today. So you can actually see my bias, see my thought process while I was in the trade, when I got stopped out, all of those things. But I literally walked price action down to the T, and you see we're still going. We're still going. So appreciate y'all for tuning in. And I trade live every single day on YouTube. On Fridays, I don't trade as much on Fridays. So most Fridays I probably wouldn't trade. But Monday through Thursday, live trading every day. I have a live Discord. If you have any questions, if it's anything you don't understand, anything you want me to go back on, please comment below, like and subscribe so I can answer your questions and get better. Remember, in order to become the person that do the thing, in order to become the person that do the thing, in order to become the person that do the thing, to have, then I keep messing up how it goes. In order to become the person, it's be, do, have. You have to become the person, there you go. You have to become the person that do the thing to eventually have, right? So that's the key. You have to become the trader that can do the thing. That's the goal. Become the trader that can do the thing. Become the trader that can do the thing. You have to get better. Remember, when things aren't working for you, right? When things aren't working, it's either because it's either working on you or it's working for you, right? If it's not working for you, that means it's working on you, and you have to do your best of figuring out, okay, why is it not working for me, and realize, okay, it's working on me, and I have to make the changes. I have to sacrifice. I have to do whatever I have to do, right, to become this profitable day trader. And you do that by actually getting better day in and day out, challenging yourself, getting better, find you a mentor, right, to expedite the process. Anyways, I appreciate y'all for tuning in. Catch y'all tomorrow. Live trading tomorrow morning, 9:15 on YouTube. Let's get it.